There's financial repression going on, but it goes in this 4-year cycle. The 4-year cycle happens to be the crypto cycle, the US election cycle. It's all the same thing. So it doesn't matter what you label it, but there is a cycle that's going on, and we're just coming into it now, which is we've now got $10 trillion of debt to refi. You have to refi the interest payments. Usually what they do is they inject enough liquidity into the system to pay for this, because there's not enough GDP growth to pay for it all. And so we go on to the next cycle. So that's really what drives all assets right now. Everything is basically correlated. But out of that, there's one asset that does a lot better because it's got the secular adoption curve, which is crypto.
Since Bitcoin's groundbreaking inception, cryptocurrencies have increasingly captured the attention of investors, developers, and entrepreneurs eager to leverage blockchain technology. Experts like Raoul and Tapiero have underscored this transformative shift, leading to discussions about Bitcoin's potential to reach $100,000. In a recent conversation with podcaster Yeno, they explored the 4-year cycle influencing finance, cryptocurrencies, and U.S. elections, highlighting the extraordinary growth and immense potential of digital assets. As Bitcoin continues to evolve, the prospect of hitting $100,000 remains a central topic, reflecting the profound impact and promise of this digital revolution. They emphasize the remarkable expansion potential of cryptocurrencies and the importance of strategic investment. Powell explained that this new cycle, driven by the need to refinance $1 trillion in debt, will significantly affect cryptocurrencies due to their rapid adoption rates. He pointed out Bitcoin's impressive performance, with an average annual return of 147%, outpacing the S&P 500, despite the cautious approach of large investment firms. Powell suggested that this cycle might lead to a shift in their strategies, believing that the growth potential for cryptocurrencies is vast, with estimates ranging from $2.5 trillion to $100 trillion.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
There's financial repression going on, but it goes in this 4-year cycle. The 4-year cycle happens to be the crypto cycle, the US election cycle. It's all the same thing. So it doesn't matter what you label it, but there is a cycle that's going on, and we're just coming into it now, which is we've now got $10 trillion of debt to refi. You have to refi the interest payments. Usually what they do is they inject enough liquidity into the system to pay for this, because there's not enough GDP growth to pay for it all. And so we go on to the next cycle. So that's really what drives all assets right now. Everything is basically correlated. But out of that, there's one asset that does a lot better because it's got the secular adoption curve, which is crypto. You can get your technology investment. The NASDAQ has been producing 17% returns annually since 2011. I mean, that's huge. While the S&P does 8%. So, I mean, Bitcoin's at 147%. So it's a whole different game. But yeah, I mean, I would just be growth orientated, all in on risk. That's what it should be. What Dan has raised the point is fascinating, because these big family offices are the complete opposite. They are super risk adverse. And you're like, and this is the reflexive thing that Dan talks about as well, is these guys are all going to end the cycle over their ski tips long again.
Oh, yeah.
That's how it always works, right? They're just not there yet. Generally, every time I've sold, it's been a mistake. And actually what you should do is look forward to the bear markets and add to them. Really, I mean, you know, I first bought Bitcoin at 200. If I'd have just kept that position, I'd have been much richer. It's stupid, right? But you get absorbed by this cycle mentality. Now, by all means, de-risk a bit, take some lifestyle chips off the table, do something. But this trade is much bigger than a cycle. And you think you're going to sell at the high and buy at the low. You've got another thing coming. How I actually think about this is I think the opportunity here is the space is $2.5 trillion today. I think it's going to 100 trillion in line with other asset classes. That's the biggest macro trade of all time and the largest generation of wealth in all human history. That's the trade. How you want to slice and dice that? Yeah, how you want to slice and dice that's up to you. What risk tolerance you have, but that's the trade. You know, when I first did the first piece of work on Bitcoin back in 2013, I said it was worth $1 million.
Yeah.
You know, and I don't think that's wildly wrong. You know, if Bitcoin's at $1 million, yeah, the space is somewhere close to my target of 100 trillion, or maybe it's 50 trillion. Doesn't matter. It's just gigantic. I've also got an asset management firm that's a crypto fund of hedge funds, so called Exponential Age Asset Management, XPAM. And the other part of this cycle is there's no secondary liquidity in crypto markets. It's bizarre. So what you get is all these early stage people, they dump the tokens, and then there's a few Asian trading shops, a few market makers, and a bunch of retail. There's literally $10 billion of professional capital in crypto markets. And Dan and I grew up in the hedge fund industry, and that's a hedge fund's dream. There's not enough capital in the space, means lots of opportunities. There's all these dislocations from new tokens coming out, going down 80% because people get liquidity. And these hedge funds can sort out through all the shit and say, hey, this is actually a good opportunity, stuff like that. And really that whole thing is getting us from the idea of this is to get us from the 2.5 trillion to the 100 trillion, give it to the 12 of the best, 14 of the best hedge funds in the world, let them do the allocation. The whole space goes up a lot. I think
over 100.
Solana does maybe 10x from here, and Bitcoin does 5x or 4x from here, that kind of stuff, typical bull market. And then there'll be the main thing that I'm starting to think through is there is always another layer one race, which is early stage when you don't have proven network effects. That bet is actually a good bet. It's not one you go all in on, but that bet was the Solana bet of last cycle, the ETH bet of the previous cycle. So I'm starting to think through that because, I mean, I don't trade, don't do anything. I just sit with my portfolio. So I'm thinking through that because I reckon there's a really good trade to come. And it's a lot of fun, but it comes very quickly and it usually gets overvalued and then goes down 95% afterwards.
Similarly, Dan Tapiero stressed the importance of allocating at least 10% of investment portfolios to crypto and digital assets. He outlined a strategy that starts with Bitcoin and Ethereum as foundational holdings, while viewing Solana as a transitional asset, evolving from a venture project to a more established position. Although he acknowledged challenges in providing precise figures, Tapiero confidently projected that Bitcoin could easily reach a market value of $10 trillion. He also emphasized the importance of having a clear investment roadmap and setting targets, reflecting on past mistakes when he neglected these principles. With Bitcoin nearing its all-time high, Tapiero anticipated that its price could effortlessly reach $100,000. He further highlighted the rapid innovation in the crypto space, emphasizing its decentralized and global nature, which helps shield it from regulatory constraints.
No, but people ask me every day how they should have their portfolio allocated. You have to have at least 10% in blockchain, crypto, Web3, digital assets. And I always say you have a breakdown, you have some Bitcoin and Ethereum, which are the core assets of the space. And then I think you can have a venture fund, and then you could have a growth fund, which is what we are, or a little later stage, not as speculative, but I think is really going to come into its own now as companies that we have start to go public and potentially start to tokenize their equity. All sorts of good things are going to happen on that front. But I think how you decide to break it up, maybe you do a little Solana because Solana is a transition asset. I think it's transitioning away from a venture project to becoming a core asset. Not quite there yet. It's hard to put like a 10, 15 year, number on it. I know Jan Van Eck, he had some crazy number recently that he put out there for 2050, was it? Or 2040?
2040, I think.
Yeah, that's very impressive. But I just think in terms of total dollars and value, and, gold is a $15, $20 trillion asset. We know all the other values. Bitcoin could easily be a $10 trillion asset. And I think today it's 1.5, 2. So easily could get to 300,000 to 500,000, which is sort of where I thought, like rationally, it made sense. Could it do much more than that? Absolutely. But I like to have a roadmap, and I like to know where I'm going. And in my experience, when I've ignored a target, it's been a bad idea, generally speaking. I mean, yes, Raoul bought Bitcoin at 200. Okay, he sold it at 2,000, and then it went to 18,000, and he probably wanted to kill himself. But he got a shot to come back at 3, 4, 5, 6, 7,000, and he got a shot to come back in. But I don't worry about what I miss. We're essentially at the all-time high at Bitcoin. Okay, essentially. 60, 70, to me, it's the same number. And the interest rate is 5. Okay, we went from 0 to 5, and we're back at the all-time highs. So as we move from 5 back to 2.5, just on that alone, just on that one thing, forget everything else, you're over 100,000 easily. Just on that one thing. Forget about all the millions of things going on in the space that we didn't talk about. Every, new development, just that one thing. I think that should give people a lot of confidence. If there's another wipeout like we had the other day, like you said, they should be buying and holding. But there is tremendous innovation going on now. And, the activity on chain has really exploded. Gensler could become the president and it wouldn't matter. It's finished. Like, it's decentralized. It's all over the world. If the US wants to, get in the way of innovation for 4 years, somewhere else will pick it up. Look, do you remember in 2021 when we all said, oh my goodness, if China, bans Bitcoin and they kick out the miners because all the Bitcoin's being mined in China,
Right.
It's over for the space. It's over. The thing went down for like a few days. I mean, every time Europe comes out and they're going to put it's all nonsense.
It's noise. It's
telling
all
you,
noise. It's just
I
noise.
can't believe how many times it's just powered through all of the human stupidity out there.
While discussions around Bitcoin and other cryptocurrencies often highlight their impressive growth potential and strategic importance, recent market trends suggest a more complex reality. Despite the optimism shared by experts like Raoul and Dan Tapiero about the future of digital assets and Bitcoin's potential to reach $100,000, recent data reveals challenges within the cryptocurrency sector, particularly in exchange-traded funds in the United States. Bitcoin ETFs have experienced 4 consecutive days of net outflows, with spot Bitcoin ETFs seeing net withdrawals totaling $71.75 million on August 29, indicating reduced investor confidence or possible asset reallocation. Leading the outflows was Fidelity's FBTC, with $31.1 million, its largest single-day outflows since early August. Grayscale's GBTC also continued its trend of withdrawals, with $22.7 million pulled out. Even BlackRock's IBIT, the largest spot Bitcoin ETF by net assets, experienced its first outflows since May, though it still maintains a strong net inflow position of $2.91 billion. Similarly, spot Ethereum ETFs returned to negative territory with net withdrawals of $1.77 million on the same day, despite some inflows the previous day. Grayscale's ETH reported significant outflows, though these were somewhat offset by inflows into its Ethereum mini-trust. These trends underscore the market's volatility and highlight the importance of a well-considered strategy, as Tapiero suggested. While the long-term growth prospects for cryptocurrencies remain strong, as evidenced by their rapid adoption rates and potential market size, short-term market fluctuations and investor behavior continue to play a critical role. These recent outflows suggest a more cautious approach among some investors, reflecting both the dynamic nature of the crypto market and the need for adaptive investment strategies. As we conclude, what are your thoughts on Bitcoin potentially reaching $100,000? Share your opinions in the comments below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.